Let's welcome on board then Dipan Mehta and chat about the market. Dipan, quite surprising, a big move yesterday, and it's almost seeming like the market is in a hurry to get all of it undone by 23rd.
Well, I think it's facing some resistance at higher levels, and there's some amount of realization that even if the new government was to come into power, the older problems still remain to be attacked. And what the strategy is going to be of the new government, even if it is the same, to face or to kind of resolve all the challenges which the economy and the markets are facing, that needs to be seen. And overall, I think some amount of absence of follow-up buying also taking place. There are fears about global markets as well, and that's also affecting the sentiment. But let's just wait and see what happens on the 23rd. I think if you have a solid number coming in for the BJP and NDA, you could see gradual rejuvenation of the markets and overall improvement in the sentiment. I think a lot of investments and consumption is waiting on the sidelines for this election result to be over and done with. And we could see that coming back into action and play post May 23rd. Also, I think one thing affecting the sentiment is the poor Q4 numbers. I think apart from cement and a few NBFCs, by and large, maybe private sector banks, by and large the quarterly numbers have been disappointing. And as such, I think investors are very perturbed about turnaround in corporate profits, and we've been expecting it for several quarters and it's not been happening. So that's resulting in a narrower range of only the companies which have been able to deliver good performance. So there are a few issues and speed breakers at this point of time. But I'm hopeful that going forward, if we have a stable government, a lot of the issues will eventually get resolved.
Dipan, you seem to be looking at rate sensitives more favorably. Is that also an anticipation of a rate cut that seems inevitable, or are you looking deeper into that arena?
I think it's clearly based on interest rates going down steadily, and the June policy of RBI is very important. It will be the first policy after the new government, and if interest rates do come off at that point of time, then certainly it will be very positive, and I think that's what the street is expecting. Also, there is the Jalan Committee report which we are looking forward to, and if any there's transfer of dividend from the RBI to the center, then that also would ease fiscal pressure and reduce government borrowing. So that would give some amount of leeway to the government to reduce taxes and give a boost to the economy. My sense is that lower interest rates are extremely positive for our economy, and it immediately results in rising consumption of automobiles and real estate and certain other non-discretionary products. And that in itself has a chain effect down the line. And we see ancillary units and then basic materials also start to do much better. So broadly, I think if inflation remains under control and monsoons are, as have been expected, pretty much normal, then you were looking at a benign inflation scenario, and that should lead to lower interest rates, and that could certainly be a trigger point for the markets to move up.
Dipan, we had an exclusive conversation with the L&T chairman, A.M. Nayak, and he is of the view that while L&T is insulated largely from the NBFC and the IL&FS crisis, that on account of the elections, the Modi government has largely contained the fallout of the NBFC crisis, that perhaps it's worse than what is actually being reported. The situation on ground seems to be fairly dire. Everyone that we're talking to says only stick with some of the quality names within this space. How would you advise investors to be approaching the space, or what exactly is the outlook even post-elections for NBFCs?
See, we're very positive on NBFCs, and apart from 2 or 3 NBFCs where clearly there's been a downgrade and actually there are some issues with NPAs, by and large I think most NBFCs have been able to manage the crisis pretty well, especially NBFCs which are connected with large business houses or which have been around for several decades. They have done pretty well. What has happened is that they have curbed their lending because of fear that they may not get resources to lend going forward. They may be hit with redemptions, which is why they are sitting on higher cash levels as well. And at the same time, they want to protect their capital adequacy. So there are certain short-term challenges for the NBFC sector, but by and large I think we are seeing those getting resolved. At the same time, this provisioning for ILFS also has dampened sentiment for a few NBFCs as well as a few private sector banks and public sector banks as well. So I think we just need to give it some more time, maybe a quarter or two, and once there's more clarity on ILFS, once we see the debt markets getting back into rhythm, and once these NBFCs get the confidence that they will get the resources to lend, you will see that their growth rates will certainly pick up, and valuations are very attractive for the NBFC sector. End of the day, it's one sector where we are seeing secular growth, and there's scope for NBFCs to increase market share at the expense of the public sector banks. So there are many long-term trends which benefit NBFCs, and there are still some pockets within NBFCs which, despite the credit crisis, have done exceedingly well, like microfinance or gold loans for that matter. And investors could look at those companies where I think not much has changed over the past few months or so.
Dipan, what are you, how much anticipation are you tracking the election results with? Do you feel that now we're pretty much almost in the clear, or would you still be incredibly cautious on Thursday just to make sure the exit polls got it right?
See, I think investors have to be cautious, and one is an exit poll and other is the actual result, and you should always be prepared that the actual result may materially differ from what the exit poll was, and one should prepare for that. So at least in the next, since the results have been out, we have not been chasing any stocks nor advising investors to put money to work. It's better to wait for the election numbers to come through. If the numbers are slightly lower than what the exit polls predicted, there could be a minor disappointment, slight decline in the sentiment. So you could have a sell on news type of syndrome also playing out. It's best to just wait and watch. There'll be a lot of opportunities to get into stocks, I feel, notwithstanding what move we saw what move we saw yesterday. There'll be many opportunities, and one should just wait for the air to completely clear out as far as election results are concerned, and then perhaps take the plunge and decide on medium to long-term strategies. Also, stock selection may change depending upon if there's a change of government, if at all, or for that matter, what the next government focus areas are going to be, and that will come through perhaps in the budget or initial communication which comes from the new government. So I think it's best to just wait and watch. In any case, there's an earnings season underway, so one wouldn't want to buy into companies where the earnings are still left to come, because there could always be nasty surprises as we have seen. So this is an ideal time to just sit tight, conserve liquidity, and wait for opportunities once there is more certainty on earnings front and on political front.
Airways in trade today because that stock is flying high, in fact 16% there. Remember, the latest reports that have been going around are with respect to the Hinduja group evaluating the opportunity of investing there. They've also got the go-ahead from Naresh Goyal as well as Etihad for the same. In fact, let's get
I know we spoke about rate sensitives, but I'm just going to check if you're actually able to comment on Tata Motors specifically, Dipan. Given the kind of knock we've seen on the stock on account of earnings, but the management claiming they're going to have that turnaround, and we have seen brief periods of intense action on that stock price as well.
So you're not very positive on Tata Motors. It's a complicated company, high degree of volatility in their earnings, and JLR is difficult to get a handle on. Sometimes China does well, sometimes US does well, sometimes Europe does badly. Then there's this entire hedge strategy of theirs which also tends to confuse investors, and there is just no sustainability or visibility of earnings as far as Tata Motors is concerned. Only reason to buy Tata Motors is perhaps its cheap valuation. Apart from that, there's very little in terms of what investors can make a projection of for the domestic business or for JLR for that matter. So I would say it's best to avoid a company like Tata Motors, which is highly complex and difficult to track and follow. Within the auto space, I think the best pick still remains passenger car manufacturer like Maruti, or a premium two-wheeler player like an Eicher Motors, where at least there is some visibility that once this trough in the auto sales is over and done with and we see revival in the auto industry, at least the market leaders will be the first to benefit from the volume growth which will come into the industry.
I was just wondering, what else would you look to buy on a decline whenever the decline comes in, or for that matter when you have some clarity on the 23rd as to which way the political leaning would be? But just wondering, Dipan, I mean, would you buy more of the same? How much more ICICI Bank, or for that matter Axis, and how much more Bajaj Finance? Or would you think that once the uncertainty and the event risk of 23rd is behind us, maybe newer names would participate if there were to be a rally?
See, I think that if you have a stable government and we're looking at lower interest rates, then maybe the Nifty Sensex company may not be the right place for investors to look at parking their money. We could see a turnaround taking place in the mid-cap stocks. The mid-cap indices have been lagging Nifty Sensex for many months now, and that kind of underperformance seems to me unsustainable. A lot of mid-cap stocks are available at very attractive valuations, having corrected anywhere from 30 to 50% from their top. So I feel that if you're convinced that gradually the political uncertainty, the monsoon uncertainty, the RBI uncertainty is getting resolved, which I think will happen by the time we hit July, August or so, we could see a bull market coming back into small mid-cap companies. And over there, I think across the board, there are many choices. Companies like auto ancillary would come into play. You could look at even cement companies, infrastructure companies, real estate companies, smaller automobile manufacturers, to an extent some of these building material type of companies, appliances, media, entertainment. So there is a wide variety of choice when it comes to small mid-cap companies. There are many in the financial services space also, which are quite attractive. So I would like to position a portfolio more towards mid-cap stocks once we are convinced that the May 23rd result has gone down well with the market, and we have a stable government, and monsoons are generally going to be okay, and interest rates regime is going to be kind of soft going forward. So I think that 2019 will be the year where you may see the mid cap starting to outperform the larger caps, because end of the day, the large index stocks, be it Reliance or HDFC Bank or Bajaj Finance, HUL, they are priced to perfection, and their earnings also are going to definitely slow down because of the base effect, and there's hardly any scope for the P's for these companies to get re-rated upwards. A good investment is one where you can see the alpha happening in the earnings and the P multiple also expanding. And those sort of scenario you will find more in these small mid-cap stocks at this point of time than some of the large index stocks, which have frankly held up the index, and that has led to a high degree of underperformance for the mid-cap indices.
Okay, Dipan, thank you so much for joining us today. And